CNBC TV18 and CNBC Awaaz present the REIT Connect in partnership with IRA.
Hello and welcome to the REIT Connect, where we tell you how real estate investment trusts can become an important part of your diversified portfolio. Now, to discuss more about REITs, we have with us today Jain Naik, who's the COO of Nexus Select Trust, and Somi Thomas, who's the Managing Director, Valuation and Advisory and Capital Markets at Cushman and Wakefield. Gentlemen, so good to have you on CNBC TV18. Now, first of all, Jain, starting with you, your REIT is a very differentiated REIT from the other three which are listed, and there are only 4 right now in India. Yours is into largely mall investments. Why do you think Indians need to get a piece of their investment in the mall's property through your REIT? What is the traction there and the potential there?
So first, a little spin-off, and when we were selling this REIT to everybody and to the common consumers, we said, here is a chance for you to get a cashback. So whatever money you spend, you can actually earn it back if you're invested in the same property. So the whole idea of REIT is primarily to give assured return to the consumer on basis of the long-term returns or the long-term revenues that we have. And why malls should be the first choice? Primarily because of 3 reasons. You know, India is a young country. Median age is 28. Aspirations are high. Consumption is always going to grow. Forget urbanization. The consumption story is not just limited to urbanization. It is also to rural areas. So when consumption is going up and malls are coming up not just in tier 1 cities, but they are in tier 2 cities, they are also fueling consumption.
Yes, yes.
The second biggest thing is that GDP is growing at a good rate. The disposable income is also growing. You heard of people graduating from a $10,000 plus dollars income at a much faster rate than it used to be last decade. Discretionary income is growing by almost 15% CAGR. So technically, people are going to spend, and where they're going to spend is
In the malls.
the malls.
In this heat, obviously, malls will do better.
Even better, because people want to have a AC environment coming there as such.
Yes. Mall has taken a very different shape of entertainment for the family also. And the categories that have been present in malls have also changed over the years, right? We'll talk more about that. But Somi, in your view, how are malls as a property really shaping up? And overall, how do you see the traction that REITs are getting?
Yes, thank you, Nisha. I think I'll just add to the point that Snag was making about the overall investments in the retail space. One thing to be understood is that malls are difficult to replicate. Office is a very stable portfolio. Globally, a lot of companies are coming to India and they are setting up their operations, and we are seeing more influx of what we call GCCs, the Global Capability Centers, and that's going to continue. But in a good mall, is difficult to replicate because you don't get the similar real estate in that area, and it's always difficult. So the growth rate that is expected from the rental with the existing population and the increasing population or urbanization that we spoke about, it's actually going to help in increasing rental. So you have a stable income and increasing rental possibility. So you have an upside compared to a technically from an office perspective. That's one thing. Most, and from your question about the retail as a sector that is really doing well, is because Indians are now, especially post-COVID, have realized that they really are, more consumption is happening by virtue of the fact that your disposable income is gone up. Yes, work from home is happening to some extent, but you still want to go out and enjoy with your friends. And like you rightly said, family entertainment zones. Where does a family go on a weekend? Especially in this heat is of course a important factor, but otherwise the kids, it becomes a destination for them to spend quality time, whether they are into movies or obviously if they're into movies, the time spent is much more. If they're not into movies, it might be little less, but it is a must at least in most weekends for a family. So that growth is really visible, and that's what we have seen from most of the listed malls. We have the numbers. The YOY growth rate, year-on-year growth rate that most of these malls are giving is sometimes in double digits. If not double digit, at least 7, 8, 9%. Whereas an office portfolio typically will be 5% normal growth and plus some mark-to-market potential. So the growth rate is much better in this portfolio. That's one advantage.
All right. So yeah, a very
Just want to
important.
add one thing to what Somi just said. Unlike office where you got a rental which is fixed, in malls we got a revenue share arrangement also. So if you have a higher consumption, if you hit a higher mark, then you tend to earn a little more.
Yes.
So that also is an upside that a consumer gets or a REIT investor gets, because you're not limited to a rental increase every, let's say, 3 years or thereabouts. Mark to market also is there when we churn and bring in new brands and get that. But the consumption of the same store increasing also means that we earn a little more from the same retailer. So that, I think, is a big advantage that we have.
So give us a sense of how the rentals in malls have increased over the last few years, and how difficult was it during COVID? So have we come back to levels, pre-COVID levels and above?
110% we are above what we were. Somi can also stand that out. COVID was, yes, a black swan event and a small aberration in time frame. But after that, not just has the consumption gone up, and double-digit growths were registered by across all malls in both last year and this year. The rentals have also gone up dramatically for two very reasons. A lot of international brands coming into India, a lot of interest of international brands coming into India. You hear about Zara Home now going to come, or you hear about Dolce & Gabbana going to come. You hear about Cafe, this Armani going to come in. So a lot of upside in terms of international brands coming in. The second is the influx of D2C brands that are now coming into retail space. So the large D2C players like Mamaearth, Lenskart,
Nykaa, yes. All of them have an omni-channel approach.
Omni-channel
Yes.
approach, so which means that in fact their sales from offline now is much higher than what they would do online. So because of the need for space, obviously grade A malls are very less in India. And since that space is less, like he rightly pointed out, if you got the right space at the right location and you got the right connect with the consumers, then you can ensure that any brand will pay you that little bit of a premium in order to be there present in that particular mall.
You made a very interesting point. So, Swami, location of a mall is extremely important, and the footfalls related to that, and therefore the people taking the lease are also ready to share the rentals, or the revenues sharing model actually has come up because of the footfall that comes to the mall by way of its location. How do you analyze this, and how is this expected to get better in future, because our real estate prices are also increasing?
Absolutely. Good question, Nisha. I think one needs to understand, let me put a landscape about retail. Many a times people have a perception that malls are not doing well. That's also because there are grade B in malls in many places where they're strata sold. They don't maintain the property. Please understand that retail malls is not just a real estate play, it's also a hospitality environment. The experience of the customers coming into the malls has to be taken care of it. You need good washrooms, you need good facilities, so it has to be kept in mind that grade A malls, you asked a question earlier, what is the pre-COVID to or the COVID situation? Most of the good malls are doing 30-40% higher than the pre-COVID numbers, not marginal. Why is that happening? Because good malls are difficult to replicate and they continue to have high 90, 97, 98 or 100% occupancies. There is marginal churn happens. That churn is good. If a brand is not doing well, the mall would like that the brand to go out and a new brand to come on board. So coming back to your question on how the mall industry and the entire churn is happening in all these spaces, it is an excellent return on investment for the players. The location commands a premium because that location cannot be replicated. You have access issues in many parts of the country because traffic jam we spoke about in the morning when catching up, the traffic situation was bad when you're coming in. So you have situations, so it evolves in various cities. However, if the developer is conscious of taking care of the ingress and egress of the people and making it convenient for shoppers to come and do their shopping and go out, and the experience inside the mall is well maintained, consumers will always want to go back to the same malls. So those locations are difficult to replicate. Cities are expanding in India, of course, and you have new emerging locations coming up, and you will have malls in those locations as well. But in a city-centric location or in the right spot, it's difficult to replicate those. That's something.
It is very difficult because, South Bombay, where we are sitting, we technically have only one mall. And if you have to meet South Bombay people, everybody will be there over the weekend. You'll manage to catch all of them. So, how do you think the mall growth is going to happen? Because also the construction, taking on that kind of capex, and also getting the right location and the real estate prices going up. Is there enough for your growth? And would you be going for more acquisitions as a growth trajectory for your REIT as well?
So, as far as model is concerned, we had a model, Nexus had a model which only of acquisitions. So, till date, our growth has been very fast. We went from just 1 million square feet in 2016 to 10 million square feet in 2023, primarily because we acquired malls. And we still feel that there is a large amount of malls that are still open that we can acquire. Because, like I said, there are at least 100 grade A malls. And between all the 4 or 5 main owned players, they own only 30-35 malls. There are still 60-65 malls which are either single owners or developers who had only 1 or 2 malls in their portfolio. And the more they realize now that it is far better to go in with an established player who runs the mall with more efficiency, is able to generate footfalls, like he said, create that consumer connect, and ensure that the rentals also keep on going up because of the consumption increase that happens. So they also, I think, are more or less keen now to roll into the REITs. For example, Select City Walk, that rolled into the REIT along with us. Select City Walk primarily is one of the most successful malls of India. But the realization of the owners that if we pitch in with an established player, then the synergies of scale that we can provide, whether it's in terms of leasing connect, or whether it's in terms of marketing connect, or whether it's in terms of the technology that we can bring in that can excite the customer, far more easier for a large player to do. And because of that, we believe that a lot of new developers and players will also now come along with us into the REIT. And we'll take advantage. REIT also has a benefit of the fact that the dividends, almost 60-65% of the dividends are tax-free. So that also is a part of a bonus for a developer to roll into the REIT and earn. Plus, his risk is de-escalated, because then he's not dependent on the earning of his one property. Effectively, he's a part of a larger portfolio. And greenfield projects, I think they're still doing at a very brisk pace. And the more now we see, people are coming up not just in tier 1 cities, but in tier 2 cities. In fact, the pace is even higher.
Okay.
So a lot more developers now even seeing good interest in terms of developing and having the patience to hold on to the property till it actually reaches a little bit of a maturity level.
Yes, and the valuation dynamics,
Valuation
also
dynamics also.
the ability to sell it off to somebody else, all those also kicks in the development of this. Somi, what are the other factors that define the growth and also the challenges that come in this sector according to you?
The growth is a function of the purchasing power of the people around. So the big cities, we already spoke about urbanization. We spoke about service sector contribution to the Indian GDP being the most important driver for it. More and more people are coming and their salaries are also getting higher. So obviously they're spending more money. That consumption pattern, consumption story is something which everybody can see through that, right? The most important point which comes along with that is the new brands coming into the country.
Yes.
Lot more. The India is one of the most important markets for any global player. So new brands coming in, they have to first establish the brand. And the visibility is very high in the best performing mall in a city. That's where, like you said, in the not the South Bombay, the island city of Bombay has only one mall. So everybody comes there. So it becomes easy for them to establish the brand and make a connect with the consumers. So they are actually, there's a competition for space in these good malls. So these are the factors that influences the purchasing power, the general population growth, the relevant population which can afford to come to these malls is actually growing in India. Young population is an important factor. And the brand mix is also changing. It is not, in the mix of the tenant mix of a mall is also changing. You probably, certain things are better. You might move to e-commerce, but not everything is an e-commerce driven model. So you would probably have repositioning the entire thing as an experience space. The F&B is going. Everybody is eating out. The food and the experience of dining is different than you ordering at home. So these things are actually changing the dynamics. So the relevance will continue to be there and it will continue to grow. The challenges when you look at it is the maintenance and the vision of the owners. At the end of the day, the experience matters to the consumers. Consumers will go to a place which is well maintained, which has taken care of their interest. So there has to be a paranoid focus on the experience of the consumer. It is not just that I built a real estate and I have rented out and now you come and do the shopping. I have to actively manage in a crowded day. It's not easy. Just not about the safety issues alone, but how do I exit, a mall, when I'm coming out of a movie in a peak time. If there is an active involvement of the mall manager, you can actually manage the traffic better. So you can't just leave it. So one of the challenges is that you're partnering with or you're investing in a professional setup who understands and appreciates that the tenants need to make money. That's when the mall will become successful. The consumer experience need to be good, and that's when the mall will become successful. That vision of the professional management is one of the important factor. If you don't have that, the good location, even a good mall can probably go down if you don't maintain that.
There's a lot of strategic interplay and also understanding the psyche of the consumers.
Yes.
And I have seen myself the experience of a good mall versus a bad mall. Yes. And also how they attract the attention of the consumers as soon as they walk in. So you are hooked inside the mall and you are probably forced to spend inside the mall. So I have seen those kind of strategies being used by well-run malls. So that's a very big differentiator.
Absolutely, Nisha. Also, just to understand, it's not from an analytical perspective, and as an analyst, when I look at it, it's not just the highest paying rent that matters it is what is complementing the entire mall ecosystem to the consumers.
Yes.
If someone is not doing well, but they still want to be there, but they're paying a rental, one mall management need to take a call. Is that really complementing and helping the consumers? So your focus on consumer and focus on tenants, that needs to be the most important thing. That continues to be the focus, and then the mall will do well. Because you are getting relevant tenants that is required by the consumers in that area. Is it working? You are actively looking into the sales dynamics of each of your tenants.
Yes.
Your backend analytics is actually tracking that and helping them to maybe improve their sales. So this active partnership is actually going to help in differentiating between good malls and very good malls.
All right. So very well explained there, Swami. And, I want to understand one important aspect. Phoenix Malls is a listed company. Now, a stock versus a REIT investment. Why should an investor look at a REIT investment when there are individual stocks, mall-owning companies which are also in the listed space? What are the benefits that come with a REIT investment?
So traditionally, always when you talk about equity always has inherent risks involved in it. You can have the ups and you can have dramatic downs also. But as far as the REIT is concerned, you are getting assured return every quarter. So effectively, if you are looking at, and that's what we talked about, diverse portfolios. If you're looking at hedging your bets and having an assured income at least coming into you, let's say whether it's pension funds or whether it's a person who requires money for the education of their kids on a regular basis and all, then investment in this kind of a REIT where the risks are very limited and you get the money coming in every quarter, the payout is there. We do it every quarter. It's maybe once in 6 months, that is mandatory, but we do out once every quarter. Plus the fact that almost all the money that is earned is distributed immediately.
So, Jen, it's not assured, but it's assured when the company gets that cash, makes that cash.
Exactly.
So that's the differentiation. But definitely that dividend is a definite dividend that the company needs to distribute to its investors, and therefore it's a cash component and the equity upside. So both put together. Do you see traction amongst retail participants? What are the big questions that they generally ask?
Retail participants have only one or two questions basically. Number one, whether whatever we projected, are we actually on track on that or not?
Right.
And that's what he talked about. What is the question of running a good mall? Meaning whether you're the right hygiene, whether you're the right traction in terms of retail partners coming into you, the right mix that you are creating, the right marketing programs that actually keep on bringing the consumer back. And hence, whether with whatever we have projected, are we on track on that or not? And if the track record, and as we have said, when we presented, in fact, we have beaten the projections that we had done at the time of DRHP. And hence, the equity upside is also there as far as the REIT is concerned.
Yes.
As well as the payout that we had already promised is already delivered to the consumer. So, when we started out with, I think there were a limited number of retail investors, but now it has gone at least 2x. So, you see that more and more retail investors, not just financial institutions, but retail investors themselves are now more interested in coming up. And
Is it because the ticket size became smaller and then therefore the affordability?
it's both sides, I guess. Like we were just discussing before we came into this thing, and Swami had this, that I had believed in this particular story, and I made my hedge bet, and I invested in it, and I was happy enough to make good with it. So I think that happy stories, once you hear those happy stories going into the medium, and more people coming to know about it, that itself is progressing, or that itself is helping us progress this particular thing much better.
Right. So the traction is building.
Traction building up.
Amongst the retail participants as well. Yes, Omi.
I'll just add to the question that you asked about growth, in a listed company,
Yes.
which is into. See, REIT, by virtue of the regulations they have, is 80% income generating. So you don't have too much of developmental properties. Developmental properties is by necessarily, it's not good or bad. It can give you growth because you are doing a project. Will it be successful or not? If it is successful, it can give you better returns. But if it's not successful, it can impact your returns as well.
So there are no construction risk, but there are only operational
There can be construction risk to a limited amount.
Limited.
Because 80% has to be income generating. You can do incremental construction. 90% of the income that you generate has to be distributed to the unit holders. These restrictions don't apply to a listed real estate company. So they can redeploy their money in buying land, which is absolutely right because that's an equity upside. There's no stable income expected from that. So this is a stable income plus moderate growth because the Indian consumption story, as we explained so much, is expected to grow. So therefore, there is a growth, but there is definitely a stable income because 90% of the income has to be distributed. Whereas from a listed company perspective, which is into normal development, they can have developmental cycle continuing. They can be buying land by doing these things.
So it's as good as yourself owning a property which you have rented it out and you are getting cash out of it, and the equity upside also is something that you can capitalize on.
Absolutely.
All right. Thank you so much, both of you, for this very interesting conversation on real estate investment trusts and especially focusing on a mall-based REIT. Thank you so much, Jain, as well as Swami. Thank you.
Thank you, Nisha.
And with that, it's a wrap on this edition of REIT Connect. Thanks so much for tuning in.
CNBC-TV18 and CNBC Awaaz present the REIT Connect in partnership with IRA.